Hi, I'm Caitlin Cox from Border Cox Lending Firm, and it's just me and a partner that lend out to companies who do need assistance. We specialize in commercial companies and finances, and doing so, I've done a little research. So today, I'm going to look at three companies. I'm going to look at Costco. Costco, they just put one locally in Baton Rouge, so I figured that'd be a good one just to show you a new upcoming business and struggles they do have. The second one I did was Pepsi, which everyone knows Pepsi. And the third one I did is Sanderson Farm. Sanderson Farm sells meats and other products. Chicken. Basically, just chicken. I do work at Costco, but I did a little research. So my answers are not biased. They're based solely on the answers I have found based on numbers and just the whole company as a whole. So I'm going to look at them as short term, long term, and who would I invest equity in. So let's get started. First off, short term, I looked at the cash ratios and the current ratios of each company. That would tell me how liquid they are right now. I looked at the cash ratios for liquidity, but also I want to make sure that if something did happen and they did have to extend their loan, they could do that. So I also looked at the total debt to equities because I want to make sure if I'm lending to the company, I'm choosing the right one. So, look, I focused on the cash ratios, and the two that I found with the best cash ratios was Sanderson Farm and Costco. So their cash ratios do fluctuate through the years. Sanderson Farm in general just dominated every other company I looked at. They have a strong balance sheet. They have a strong, return on assets, and their finance really good. They have a bunch of money in case something doesn't go right. Say they have a bad year. 2011, they did have a bad year, and they were still able to back it up with their balance sheet and pay all their bills. So, short-term wise, I would definitely do Costco because they do have an average between I'm going to do it in millions, so 0.47 and 5.1. Cash ratio, and I'm going to go with Bloomberg because that's where I got my information from, so it will be brought into that way, and it's not the whole millions. I'm not going to break it down like that, just for time wise. Sanderson Farm's cash ratios were pretty strong. They had they had, every time they build a new building, they are a small franchise, so it's growing slowly. They're doubled from 0.10 to 1.2, so their cash ratio is really strong right now. It's the strongest out of all three companies. I wouldn't do Pepsi company because it fluctuates with their cash flows, but also Pepsi has a big debt to equity ratio, and I'll talk more about that. So for short-term financing, I would do Costco and Sanderson Farm, just because I feel like that'd be the safest for me to do. So moving on, long-term, I would do Sanderson Farm because they do have a lot of cash, and their debt to equity ratio, it's the strongest of it because it's still low. It goes from 29.26% to 2.23%. So it's pretty low, considering as a franchise. Costco did have a fluctuation between 17.3% and 40%, but it's still, I want to just go with one company instead of two because this is a big investment I am making, and I feel like Border Cox Lending Company can't do two investments right now that large. So I did the one on Sanderson Farm. Sanderson Farm has an amazing debt to equity ratio. It's usually under 0.10, which is really strong for a company. Costco, it fluctuates too much between 9.7 and 40.7, so I didn't feel like that was too safe for me to do. it's just too risky. Costco's new in the area. I don't trust it that much. PepsiCo jumped from 4.5 to 164% debt to equity. I feel like that's too much. Pepsi is being outran by Coke in our area, and I don't know if it's doing it anywhere else in the country, but the way the debt to equity ratio is, they're borrowing more money than they really need to do. So definitely Sanderson Farm. The third one I would do, I was asked to do was who would I invest in. I do currently invest in Costco because I work there, so I do have equity in them. I do buy stock. I do get dividends back, which are $5 usually, per share. So I mean it's not bad. And I do invest in the company. They take a few different ways out of my paycheck, so I feel like that's pretty good too. The lending company I do on the side. And so looking at the difference in companies for number 3, the reason I wouldn't do Costco is their return on equity. It's pretty low. It's usually about 12 to 15%. And I mean it's good considering, but I would feel comfortable with a little higher number because actually if I had to invest in just one company, it would be that. But since I do have options and I can only invest in 2, I'm going to invest in 2 strong ones on the equity side. PepsiCo has a strong return on equity. It's usually between 28.84 and 31.32. So I feel like that would be where I would put more of my money at. Sanderson Farm, of course, is dominating as usual. So their return on equity is it's actually increasing. It's tripled. It went from 9.9 to 30.87 over the last few years. So I feel like it's improving. It's opening a couple new facilities. It's opening a new chicken growing facility. It's opening a new growing facility. So I feel like it's going to provide us more and making us more global and offering it to more people. So I feel like the growth in that will be very beneficial to me and invest in equity in it. Costco Pharmacy is expanding, but currently with all they're trying to put too many new places together, and currently they're coming upside down. So I don't feel like it would be very beneficial for me to invest my money in it, equity-wise. So just to recap, a short term, I would do Costco and Sanderson Farm. A long term, Sanderson Farm and invest equity in. I would have Pepsi and Sanderson Farm. Thank you for listening to my presentation today, and I hope that gave you some good answers. Thanks. Have a good day.